Okay, all right. So let's get started. Nigel, then we've got our first guest joining us on the show. Stephen Englander, Managing Director, Global Head of G10 Forex Research, as well as North American Macro Strategy at Standard Chartered Bank is with us. Stephen, great to have you join in. And it's an interesting morning, right? Because suddenly the whole world is feeling the chills, so to speak. And it's all about AI and, whether this kind of pulls back stronger or not. But first on U.S. macros themselves, as we start getting more data, finally now that the shutdown is over, are you expecting to see a steeper deceleration in the U.S. economy? And particularly on the labor market side, what are your expectations?
Well, we'll be getting the September numbers next week, and it's possible, it's possible they'll be softish. I think that the Fed will really wait to see what the November numbers are saying, because September is pretty dated. We had a couple of ADPs since, we've had claims. It's history now. But I think that there's still room for more labor market weakness. It's getting tight. We still think that they're going to cut 25 because we think that the numbers will support it. But we're also not expecting to see much from the Fed next year. We think that once they're done with the next cut, they'll be pretty much done as far as cutting goes.
All right. Hi, Stephen. Good to see you, Ben. Give us a couple of other cues then in terms of, the movement of the dollar index. It was giving signs that it's going to be falling apart and moving maybe closer to a 95.5 handle odd. That's actually stabilized. What's the outlook out there? Because that's important from a flows perspective, particularly from an emerging market like India. Your view on the dollar index?
Sure. I mean, there's lots of things going on with the dollar. Some, long-term themes playing out in the course of one trading day. I think that when it was selling off in the morning, it was sort of the AI sell-off and the angst about the U.S. economy. When yields started backing up as Fed speakers were more hawkish, the dollar had a real hard time selling off further and actually recovered some ground in the New York afternoon when those comments came out. And I think we're going to have a battle here. Ultimately, we're optimistic on the U.S. economy. We think productivity is going to pick up. We think profits are going to stay robust. And we think that will attract enough capital to the U.S., but we don't think it's going to be a straight line. We think, as we've been seeing in the last couple of weeks, there'll be ups and downs, but ultimately we see a stronger dollar. And thinking of the euro going down to, say, 112, certainly below 115 in the course of the next year.
Okay. Stephen, from everything that you're hearing around you, this whole talk of diversifying a bit away from the AI trade, right? And we've seen evidence of that. And when such diversification starts, it usually comes with a fair amount of volatility. So do you think, where do you see that money rotating? Do you see that going to U.S. treasuries? Do you see that flowing overseas? Or maybe U.S. equities? Any sense?
Well, I think that's up in the air. I think there's a lot of nervousness about AI and valuations. I think what investors would like to see is that some of the performance shifts to other sectors outside of the tech sector, to the tech using sectors. And that would probably be very positive, both for the dollar and for U.S. equities. But I think right now they want to see a couple of more quarters of good productivity growth, good profits growth, until they buy into it.
All right, Stephen, final question before we let you go. What about an India-US trade deal? We thought we were going to be getting a favorable outcome. A lot of other nations have, but we are still waiting in the wings. What's your take with regard to Trump's trade tariffs? And do you think India is going to get a good deal?
I think there's desire on both sides to come to a deal. There are economic reasons, there are geopolitical reasons for there not to be a trade conflict between the U.S. and India. But again, the last 100 yards seems to be taking a long time. But ultimately, I think there will be some resolution.
Okay. All right, Stephen, we'll leave it on that note. Thank you very much for joining in. And we look forward to more conversations in the future. Thanks for being with us.